Welcome back. In this video, we're going to take a practical look at your pricing model and your financial projections. And the goal of this video is to help you with a specific tool that I've created to balance out your pricing strategy to make sure that you are profitable in the long term. So it's going to be a complicated video, this, I want to warn you. But if you can wrap your mind around the process of pricing your products and your services correctly, it can help you with your cash flow, it can help you with your profitability and get the right balance for that whole process into place. Let's jump over to the My SME Manual. We're going to scroll down to 1.4, Financial Strategy. And firstly, I want to explain to you the financial strategy and the pricing model. You want to first of all set a profit goal for yourself. So the formula is fairly simple. You have your profit goal of, let's say, 30%. That gives you 70% to play around with and get all your expenses to work within that 70%. So you need to consider marketing, cost of goods sold, admin, and salaries and commissions. This admin can be anything from logistics, it can be administration expenses, electricity, etc., etc. It's just a general term to get all of the additional expenses fitting into your pricing strategy without getting into much depth. We want to keep this practical, relevant, but also fairly simplistic. Right, and in formula, in the currency formula, you're looking at your currency. Let's say my selling price is 1,000 Rand, then my profit goal according to this method, which is 30%, will be 300 Rand, and that leaves me with 700 Rand per product or service to work out all my expenses. This is going to help you to create a break-even projection that is fairly accurate and not assumptions and thumbsuck knowledge. I've created my first package, which is my limited edition shoes. And let's say for the limited edition shoes, my profit goal will be 5%. I will get to those calculations now, but my profit goal is 5%. Expenses, then it gives me 95% to fit all my expenses in this. With this particular first package, I just want to enter the market and get my cash flow going. I'm going to look to make my profit with my second package. I will spend 10% on marketing, and I want to add a side note here that a lot of my clients in the past hates it to spend money on marketing. But ultimately, you got to change your mindset when it comes to marketing. Marketing is not an expense. It's an actual fact, an investment for your business to get foot traffic, online traffic, getting your brand out there, getting people to see you that they can come and buy and become clients. You must change your attitude towards marketing. It's an investment, not an expense. So I want to, from the get-go, put money aside to invest back into my marketing. The second part here is your cost of goods sold. So I'm going to, let's say, argument's sake, that my shoe stock that I need to purchase in order to make shoes, each shoe costs me 1,000 Rand, whether that's a custom shoe or whether that's a limited edition shoe. Each shoe will cost me 1,000 Rand to create. That means my cost of goods sold over here, if I've got a profit goal of 5%, I want to say, right, okay, so the cost of goods sold is 50% because my selling price is 2,000 Rand and my cost of goods sold is 1,000 Rand, which leaves 50% as the percentage there. I'm sitting currently on 60%. I still have a couple of percentages to go to make it all the admin up. So let's say 10% goes into my admin expenses and salaries and commissions is 25%. Right, so that's how the model works. I've got a profit goal of 5%. My expenses then is 95%. 10% goes to marketing, 50% goes to cost of goods sold, 10% to admin, and 25% to salaries and commissions. In the long run, I know at least that I'm not going to make a loss. I'm going to make a profit in the long run. However, this might not be sustainable. So we'll have to take a look at this particular package and the pricing strategy to get it more profitable. I have to convert this now over into my currency. So let's say the competitor's average price, what we spoke about with all those shoes, is 1,800 or 900 Rand. My selling price is going to be 1,990, but for the sake of the calculation, I'm going to make it 2,000 Rand. So my profit goal is 5%. And 5% of 2,000 Rand is 100 Rand. I'll add that in there. My expenses, the goal for the expenses leaves me then with 1,900 Rand to make up. Okay, 10% of the selling price, which is 2,000, is 200 Rand. So that means for every pair of shoes that I sell, I'm willing to reinvest 200 Rand into the marketing. The cost of goods sold, as I've already mentioned, is going to be 1,000 Rand. The administration expenses, then at 10% is another 200 Rand. And the salaries and commissions, which is 25%, will be 500 Rand. And this then should add up to 1,900. 200 plus 200 gives me 400, plus 500 is 900, plus 1,000 is 19. So that is how you work out the formula practically on your My SME manual. I'm going to do the same now for the second package also. As you can see, I've quickly calculated the formula on the My SME manual. And with the second package, which is the custom shoes, because I've got the concept of custom shoes, I'm lifting my price with 500 Rand. And that gives me extra 10% of profit that I work into my second package. Just quickly running through, the profit goal is 15%, the expenses goal is 85%, then marketing, admin and salaries remains the same. The cost of goods sold, it's still 1,000 Rand, and because my selling price is a bit more, it means that I've got more leverage in terms of a bit of extra profit. Calculating this in the currency, competitor's price, I'm still going to go with all those shoes, which is 1,900. My selling price for the custom shoe will be 2,500. My profit goal is then 15%, and 15% of 2,500 is 375. My expenses goal, I'm going to add everything up, so the marketing remains at 10%, and 10% of my selling price is then 250 Rand. Cost of goods sold is 1,000 Rand. That now becomes 40% and not the 50% for the limited shoes, which is my first package. The administration is also 250 Rand. My salaries and commissions, 25% of 2,500 is 625 Rand. And now I'm just going to add everything together. That's 500 Rand, 1,005, 2,125 Rand. Plus this 375, this should give me 2,500 on the dot, and that is my formula now calculated on the manual. What you now want to do is you want to understand your break-even projection. I'm just deleting the other packages for clarity purposes. So I want to take this formula of package 1 and 2, and I want to do a calculation and see whether it's a profitable model, where's my issues going to be, and where is my break-even point. I've created a very custom formula or model on Google Sheets. I've got the link for you here on the My SME manual. So if you hover over this link, click Control and then click on the link itself. It's going to open up on the model that I've created here for you to break even or work out your break even projections. Please don't complete anything on this sheet. What you need to do now is you need to go to File and click on New and Spreadsheet. Create your own spreadsheet from scratch. What you do now is you can copy this whole formula, Control C, go to your new spreadsheet and paste it. We're just waiting for that formula to carry over. It can sometimes take a couple of seconds. And there we go. Here is the calculation now. We're going to get going and do our own financial projection on this new spreadsheet. What I've done is I will also want to bring in now your projection for how many units you are going to sell per week and how many units, if you're in manufacturing, you will produce per week. I've gone back to my Google AdWords to do a projection based on what the market is telling me. So I saw a new keyword just earlier when I did the search, formal shoes for men. So this will replace my current keyword formal shoes because this can be male or female. I'm rather going to go with formal shoes for men. And there's 1,600 searches in my direct location, which is Cape Town, Western Cape. I'm going to do a very brief projection here. Let's say 1,600 searches per month. If I can get a 10% click-through rate, if I bid on these keywords, that means I'm going to get 160 people on my website. Of those 160 people, if I can close sales of 15%, it will more or less roughly be, I'm going to do a calculation here. So let's say 1,600 clicks. If I get 10% click-through rate, that's 160 feet on my website. And if I can close, let's say 25% of the 160 people on my website, it will be about 40 sales per month. This is a very rough calculation, best case scenario I'll almost say, but let's say I'm going to look to sell 40 pairs of shoes per month. I'm going to go with a calculation of saying 30 pairs of shoes will be the limited edition and 10 will be the custom shoes. Okay, so let's get going. I've got space for you here for up to 5 products or services. I'm only going to use the first 2. And everywhere where you see the yellow blocks, that's where you need to complete the correct data. Everything that's not in yellow, for instance, the white blocks over here, the gray blocks over there, the blue blocks over there, you don't touch, otherwise you're going to mess up the formula. You only complete the yellow. Okay, now it starts with operational expenses. I said 10% for marketing, 10% for admin and operations, and 25% for salaries. That's what I'm starting out with. And weekly units produced for product 1. Let's say, to be safe, I'm going to produce 35 pairs of shoes per week to make sure that I can get into that 30 sales per month. Or rather, wait, I made a mistake now. So let's say weekly units produced 35. If I want to sell 30 pairs of the product or service 1, which is my limited stock, that means 30 divided by 4 weeks. Let's say 30 divided by 4 weeks gives me 7.5. So I need to create about 8 pairs of shoes per week. Just for argument's sake, I'm going to say 10 to be safe, right? And then if I sell 10 pairs of shoes, the custom shoes, that means I only take on order, which makes it a better calculation in order for not any stock that's left over. For the sake of this example, I'm going to now just say 0 at the rest of the calculation. So we're going to scroll over here, 0 and 0. Cool. So there we go. We're only working with product service number 1 and 2 now. So number 1, I want to produce 10 units per week, which gives me 40 per month. And for number 2, let's say I actually made another mistake here. So if I'm selling 10 per month, it means that I'm roughly doing 3 per week. So I'm going to say, let's stick with the 3 per week. All right, my cost price is $1,000 for each one. My selling price is 2,000 Rand and 2,500 Rand. So I'm just going to add that in, that you can see I'm filling it into these blocks. These percentages are correct. And there we go. Now you can see the profit goal automatically works out. 5% for product service number 1. The expenses is 95%. My cost of goods sold is 50%. It should carry through at product service number 2 also. And I see what my mistake is. My mistake is at my selling price. There we go. Now you can see the profit goal is 15% as I've calculated on my SME Manual. The expenses is 85% and the cost of goods sold is 40%. So let's get cracking. If you scroll down, you'll see week 1 to week 4, and you can add in the dates over here. I'm going to say, for instance, week 1 is going to be 01, let's say, of January to 07 of January. Week 2 is going to be 08 to, let's say, 1401. Then week 3 will be, whoops, let's just fix that. Week 3 then will be 1501 to 2101, and then we've got a longer last week, which is 2101 up to 3101. There we go. Right, we said we're gonna sell 30 pairs of shoes for the month, which means we need to produce about 10 per week to make sure we don't run out of stock. And if I'm going to sell 30 per month, it's about 7.5 per week. So I'm going to say 6 in week 1, 7 in week 2, 6 in week 3, and let's say, let's make it 7, 7, and ultimately 9. That brings me to my 30 pairs of shoes. Right. You can see here, once I've added my units sold for product service 1, it gives me the following statistics. Lost stock. In other words, if I spend 1,000 Rand for 3 extra pairs of shoes that's not selling out of my shop, I lose effectively stock of 3,000 Rand if I don't sell it somewhere in the future. This is maybe more applicable for retail companies in the food sector where the food goes bad and you need to get rid of the food. It shows you your revenue, and the revenue then is my 7 units sold times my selling price of 2,000 Rand. So my revenue then for the week will be 14,000 Rand. Gross profit is 7,000 Rand. The gross profit obviously is then your cost of goods sold, which is 1,000 Rand minus your revenue gives you your 7,000 Rand. Okay, let's get then to product service number 2, where we are selling 3 units per week. Based on my market research, this is not thumbsuck. This is fairly as accurate as I can be with my market research. So you can see here, because I only make my orders on, or make my custom shoes on order, I'm not losing any stock. That's the good news with this model. I'm doing 7,500 per week. My gross profit is 4,500. And that's going to give me a fairly accurate projection now to what I can expect. Right, the magic now comes in. I just want to make sure that the formula then balances out here, because we don't have really any products or services under 3, 4, and 5. So we only work with these figures over here, product service 1 and 2. So if I scroll to the right side, this is going to give you your total expectation for your projection. And if we sell about 10 pairs of shoes per week, we might sell 42 at the end of the day with a total revenue of 90,000 Rand per month. I'm losing about 10,000 Rand in stock, which is not selling out. And my gross profit is 48,000 Rand. The 10% I'm willing to spend back in my marketing is 9,000 Rand. The admin and operations is 9,000 Rand. So I need to be sure that my rent, my water and electricity and everything that goes with it is below 9,000 Rand. Otherwise, my formula is not making sense. And I only have 22,500 Rand for salaries per month. This is going to give me a gross profit of 7,500 Rand. And you need a reinvestment mindset. So in the beginning, this doesn't go to your pocket or your fancy new car. This goes back into the business. At least 75% goes back into the business, where you make your business stronger, better, with all sorts of investments that's necessary. Right, in a nutshell, that's how you do your projection. I can then also take this formula and I'm going to now paste this on my SME manual. So I'm going to take away this formula over here. I'm going to paste it. And it looks like a bit of a mess. All right, so we want to fix this. What I'm going to do is I'm going to delete product, service 3, 4, and 5. That should give me a bit more space. It still looks a bit of a mess, so I can play around with it until it fits into my manual. There you go, I've played around with it. I've made the fonts a bit smaller. I've deleted some of the blocks and it fits in more or less at this stage. Right, there you go. Now there's some key questions you need to answer about your model, and I'm forcing you to address every single thing. The viability of the pricing model. Number 1, is your selling price too low for a reasonable gross and net profit? I would say in the long run, yes. But to launch the business and get some traction, no. So that's the idea. I first want to get myself out there, then I'm going to start to increase my prices steadily and surely for long-term success. Monthly unit sold. Is your monthly unit sold based on your market research, and is it realistic? Yes, I believe it is, even though it's maybe a bit too much. I think I might even have to tone my expectations down because it's really difficult. I want to warn you, it's really difficult and you have to work really hard to get customers on board. Cost of sale, is your cost of sale too high? It is maybe a bit high, but ultimately I need some space in the mall, which is going to cost me a lot of money. So it's a 50-50. I might play around in the future with this to see if I can improve my pricing models. My gross profit, my estimated gross profit, let's quickly go back to my graph. Estimated gross profit, it looks like 48,000 Rand. That's now per month. My marketing, I'm spending 10% back on my marketing, which is ultimately, if I go to the figure, it should be, let's jump back to the projection. My marketing spend is then 9,800 per month. Admin operations, also 10%, should be 9,800 per month. My salaries is 25,000 or 22,500 per month, and my net profit is going to be 7,500 Rand. Okay, there's some more options out here for you. If your model is not really successful, you've got 3 options at the end of the day. Number 1, you can increase your volume. Number 2, you can increase your selling price. Number 3, you can cut your expenses. So let's take a look practically at how that works. If I'm going back to my model, I want to, let's say, choose option 1. I'm going to increase my volume, try to get more people in the store to buy more shoes. Let's say I want to double each section. So I want to go to 20 weekly units, and I want to go to 6 over here, which means I need to double in sales, 15 per week and 6 per week. Right. This is just the first option, and immediately you'll see the difference. My gross profit goes to 96,000 Rand. I've got 18,000 for marketing spend now, and I'm suddenly on a net profit of 15,000 Rand. So that's your first option. Your first option is to increase the volume. That goes hand in hand with my marketing strategy. Can I get more customers in? If yes, I will be able to increase my volume. Number 2 is to increase my selling price. So let's say with the increased volume, I'm saying, all right, I'm going to take my custom shoes to 2.5, my limited edition shoes to 2.5. I'm going to make my custom ones 3 grand. Then we will see the figures grow even further. Now you're sitting on a gross profit of 138,000 and a net profit of 38,000. So it's increasing. Your last option is to cut your expenses. Especially my suggestion would be cutting expenses when it comes to your admin. Let's say if you can bring that down just by 5%, you'll see there's definitely a difference in your administration expenses. So your gross profit and your net profit is more. Right, so that's your 3 options. I think in this case a relevant option would be to increase the volume, double sales in 6 months. That would be the goal, and then increase each product with 50 Rand. Oh, sorry, 500 Rand. There we go. Right, so that's my options. This is not applicable at this stage. I can't really see I'm going to decrease my expenses. That's going to be very difficult. There you have it in a nutshell. That's how you work out your pricing strategy. I will see you in the next video.